Alex, and today we'll be looking at quadrant analysis in Tableau, looking at financial data in the US stock market. So I'm connected here to my Postgres database on my analytics server, data testrectanalytics.ai. I'll go ahead and sign in. And here I have the company financials quarterly data set, which is already curated, where we have the data at the company quarterly level. And what I am interested in doing is creating a quadrant analysis based on companies and how they are priced in terms of net income and their market capitalization or their valuation in the markets, and looking to see companies that are priced higher versus ones that are priced lower. So let's start with simple. Let's start with revenues because they're always positive, and we'll take an average. And let's look at market capitalization, which is their current. Let's take the average of that. Let's take a year filter. So we're only interested in, for example, let's say since 2020. And let's add symbols to the details. Now, one thing you notice right away is that the data gets heavily skewed. So what we want to do is edit our axis to show the data logarithmically. And same thing for market capitalization. And this is because the data is not linearly distributed in the stock market. To make the charts, let's decrease the size a little bit. But we clearly see that there is a relationship with revenue and market capitalization. Let's rotate it so that we have revenues on the x-axis and market cap on the y-axis. Let's exclude zeros to get rid of some of that white space. Let's exclude zeros, and we might have some data anomalies here. Let's just filter those out. Those could be data that we don't have fully accurately reported on yet, so let's just exclude those out for now. Well, actually, some of these companies may have perhaps have dropped in significantly in their valuations, even though they had high revenues. Perhaps they're going bankrupt, we don't know. Or they could be a data quality issue at the moment. That's still a work in progress in this data set. Let's just filter them out just for the sake of showing this nice relationship, which it looks very linear, but remember that we are looking at this in logarithmic scales. So to create our trend line, let's show trend lines. It's not going to, this is a linear trend line on a logarithmic x and y axis. So what we want to do is give it a power relationship, right? So we're looking at a power relationship, or the exponential relationship doesn't really work as well. Okay, so we're looking at a power relationship, right? So e to the x, where there's a multiplier in terms of the revenue of the company and what its valuation is. And we can see that it does not, there's a skewness here. These tails here are skewing the chart. So it doesn't really go through smoothly like this, which is what the intuition seems to indicate. I would draw the line more this way, and that's because we're looking at the squared error, right, of the exponential trend here, or the power trend, and so there's some skewing going on by certain companies that have high valuations but no revenues, right? And these could be startups. Let's take a look. Let's take a look at industry, just for curiosity, and let's add color, industry to color. Okay, that's too many trend lines. Perhaps let's edit the trend lines and let's not do it by industry. Let's just still keep with a single trend line. So there's some finance, life sciences, startups here. I was expecting perhaps more tech companies, but there's a lot of life sciences companies that are probably not yet profitable, but are probably working on some patented technology that might later. There's some technology companies here, of course, and so there's sort of skewing our relationship a little bit from what we would expect. We could filter out companies with little revenue. Let's take out the industry categories. Well, no, let's keep it for now. Let's add some filters on our axis. Let's take revenues here. Let's say we want our average revenues to be above a certain amount. I wonder what negative revenues are like. Perhaps that could happen for some interesting companies out there. Perhaps finance or different types of companies could actually have a negative revenue stream, which is kind of interesting to learn about. Let's say we want to have at least 10 million, for example, revenues. Okay, and we can sort of see that cutoff where the line is starting to sort of go more with the trend, and so we're cutting off that fat tail there. And let's set, instead of industry category, let's look at companies that are not just appraised by revenues but also profitability. So let's look at net income. We have profit or net income, but we also, what we're interested in is yield, right? And yield is net income divided by market capitalization. So let's look at the current yield, and let's add that to our colors. Let's look at the average, right? So now yield, we're looking at profitability, and again we have some funny numbers. So I'll go ahead and make it more stepped color, and instead of using the full range, let's center it at 0, but let's start it at, let's say, negative 0.05, and let's end it at 0.05. Mind you, this is quarterly yield, not annual yield. So because we're looking at the quarterly data set, so this is the quarterly net income divided by the market capitalization, or the average quarterly net income for since 2020. That's what we filtered to. We can show our filters here. We're starting from that year. We could look at different years if we wanted to. So we can see there's a lot of profitable companies up here in this quadrant. They have high revenues. They also have higher capitalization. They're more profitable. We see, in a way, they're eating lunch of companies that are with smaller revenues, that are not as profitable, and their valuation are not as high. And one of the reasons for the valuations to be logarithmic is because all stocks and companies, a lot of the time they change their valuations in terms of percentage, not in absolute values. So a company with 10 billion in revenues, for example, could be priced at significant metrics of valuation, also depending on their profitability. Let's edit this axis so that we can perhaps, or let's format it so that we can see the numbers more clearly. It's too many zeros, makes the brain hurt. Let's make it currency, and let's display the units Let's try billions. There we go. I guess we don't need decimal places on the x-axis. So there we go. We can. Oh no, we would need for smaller valuations, right? Yeah. Well, at least it's nice to see a decimal there. So this is 1 billion. There's a billion valuation and 10 billion, and we have, of course, the Apple, Microsoft's $1 trillion valuation companies, Amazon up top. And so theoretically, if as an investor you might be interested in profitable, stable companies up here in this quadrant above our line. The line could symbolize sort of what the market assumes is possibly a fair price for a company. Of course, this is a very simplistic overview of how companies might be valued, and there's a lot of dimensions and factors that go into the valuation of the company, and of course these change. We're only looking at most recent market capitalizations, which could fluctuate next year and for very different factors. But this creates a rough intuition. We could then further drill down into companies to understand why they might be valued the way they are. Why did these companies, for example, up here, or sorry, these are very high market valuations, so we might be interested perhaps in these companies down in this quadrant which have a lower market valuation but are quite profitable and have a lot of revenue coming through, which should hopefully also symbolize that they have a lot of cash flow and they're fairly healthy companies. Let's take a look. For example, there's BBU, SNEX. Not sure what these companies are, but I can further filter down on them. So why don't I create a set? Let's create a set of these symbols, and let's call them interesting companies. Okay, let's create that set in Tableau. Okay, so I have that set, interesting companies. Okay, so I've highlighted them. Let's create another workbook and let's take a look at those companies. We'll add them to their filter, and let's take a look at revenues, and let's take a look at your quarter date. Everything's at the quarterly level. So we can keep it at the quarterly level, and let's separate them by symbols. Okay. It could be that we just simply didn't get all the reported revenues yet, but yeah, BBU is an interesting company that looks like it's potentially growing in revenues. It looks like some of them are they have fairly low valuations, so perhaps they're not growth companies, right? So they're sort of oscillating in their revenues. Sorry, it looks like Tableau is frozen for some reason. Okay, so we could bring in the company names to know what they are. It's not just the symbol. Let's look at name. Let's look at company name. Let's add it to, I guess, color instead of symbol. Let's look at company names. Oh, some of them might have more than one symbol, actually. Interesting. That might explain quite a bit. So we could add it to the tooltips here. Right, so we have this is country name, not company name. Sorry. Company name current. There we go. So we have StoneX Group, World Connect Corp, Brookfield Business Partners. Let's add it to the colors. Oh, it's doing it as an attribute. Okay, let's just move forward from this. That red one, Liberty Broadband Corp. So let's take a look at perhaps some growth stocks up top. So these are companies with roughly, let's say, the same revenue as the ones down here in this quarter, but they're much more highly valued. So let's take a look at some of these ones. Let's create a set, and let's call them expensive companies. Click OK. And let's go back to our sheet 6. Let's look at expensive companies. Okay, so get some funny data going on here with KO. I'm not sure why that's happening, but it looks like almost all of them have a steady growth projection going up. And it looks like that's probably baked into their valuation. As you can see on average. I'm not sure whether these, oh, this Coca-Cola, okay, reported some very high revenues for particular quarters. Probably might want to double check those numbers against their actual reports, and we have those. If we can always double check those. If we look at the SAC-CAK URL, now let's add that to the tooltips. We can simply go to sac.gov, Edgar browse, and we have that central index key 21344 for the Coca-Cola company, and understand whether they really did report so much more revenue for those quarters, just to confirm that our data in this database is fully correct, since not every single row has been reviewed yet by a data quality analyst. We always want to have some degree of skepticism when looking at the data, especially anomalies. And it's always good to read footnotes in financial reports to understand where these numbers are actually coming from. Okay, well, this is just a brief introduction start with how we might be looking into analyzing different companies from a sort of top-down, highly valued, less valued perspective. I would probably assume companies in this quadrant are somehow growth-oriented. Companies here are probably more steady, and some of them might pay dividends, perhaps, or at least the ones that are profitable may or may not be dividend companies here. Just some initial assumptions, just looking at the data, which I would further want to check out. Okay, thank you everybody for watching, and enjoy the rest of your day. Okay, bye-bye.